You've heard me talk about trend trading over and over and over again, and that's because trend trading is one of the easiest ways to trade any market, whether it's a bull market or a bear market. Sideways markets, not so much, but pay attention because we're in a bull market, and this is the exact strategy that you can use to trade a bull market, get in, get out, make some profits, and do it over and over and over again. First thing you need is a trend-based indicator. Now, you can use your eyes, we can look at charts, and go ahead here over to TradingView and you can see my chart. I already have the TBO on it. Without the TBO, I can look at this chart for OM BTC on Binance. Yes, the chart's in a really strong uptrend. But what about a chart like WIF? Is this one in a strong trend? Or what about Avalanche? Is this one in a strong trend? No, it's not. And the reason why is that I can use my eyes to gauge the strength of the trend. I can see some things that are happening based off support and resistance levels, but no, this chart is not in an uptrend that is super duper strong. Same thing with WIF. Although when the short term WIF is extremely strong, we're looking at the macro trend, it's not that strong of a trend. Comparing this to OM. OM has had an incredible year ever since January. It's up over 5,000%. And that means while Bitcoin has been pumping and dumping all along 2024, this chart has actually been a gift for trading. This chart has been great for automated trading tools like DCA bots that will automatically buy and sell without you having to lift a finger. And this chart's also great for active trading. You actually sitting in front of the chart, identifying where you want to enter, where you want to exit, all that fun stuff. But the point is that we can use our eyes first, but I want to show you two indicators. One is paid and one is free that you can use to gauge the strength of a trend. And the first one is my beloved TBO indicator. The TBO stands for the trending breakout indicator, and this one excels at showing us the strength of the trend, when a breakout is going to happen or break down, and when the trend strength could be weakening, and we could see a change in the trend, either for worse or for better. The central part of this indicator is the TBO cloud, and it's this green mass right in here, which comprises of four lines: the TBO slow line, medium slow, medium fast, and the fast line. These four lines create a cloud, very similar to the Ichimoku cloud, which we're going to look at soon. So when we have the price above the cloud like this, and all four lines of the cloud are angling up like this is a strong trend that we can expect to last for at least another 2 to 4 weeks. When the price comes inside of the cloud, that's another story. This is a moment where the price was having bearish consolidation. Whenever we're bullish and we go inside of the cloud, that is bearish consolidation. Simply put, consolidation is when the price is stuck in an extremely tight trading range, and it's not going to break out to the upside or to the downside until the market decides which way things are going to go. But when we're using the TBO to gauge the strength of the trend, we want to focus on this lower line right here. And this is the TBO slow line. If the slow line is angling up and we're in a period of consolidation, we can trust that the breakout's going to be to the upside. Whereas if the slow line is kind of flat or it's ranging down, then this is probably going to be a bearish outcome for the price. So here's how the trading strategy works. When the price is bullish like this, we can enter into trades and we can ride the trend. Now on the daily time frame, you're going to have to wait a lot longer for trades to come to fruition. But once we finally get a breakout above the cloud, we can buy when the price comes right back here to bounce off the TBO fast line for a springboard bounce. And the last one has netted us so far 27%. If we are not patient enough to wait on the daily time frame, of course we can go to faster time frames. We can use the same concepts and the same things that I explained before about trend strength and also about consolidation still apply. And what you'll see on faster time frames like the 4-hour time frame is that we get lots and lots of touches. There's a touch right here, there's a touch right here, there's a touch right here, and more recently we had another touch. Every single one of these touches provides us with an entry point, and then from this entry point we can trade the difference. We can trade that bounce as we go up higher and higher and higher. Before you go crazy with this, spend some time looking at the history on the chart, because you want to measure the performance of these bounces off the TBO fast line. Or if you're using a moving average, same concept applies. See if there's a common denominator. We have a 3 to 5%, so aim for 3%. Be on the safe side. Don't be super aggressive, because we can see over and over that this chart is just giving and giving and giving. We're getting lots and lots of pumps right here. And by getting all of those pumps, that means that we can get in and out. Step 1 is identify a strong trend. Step 2 is reinvest profits. Now, this one is something that a lot of people have a harder time with, but this is actually how you grow your account, especially with trend trading. Think about it. If I use the same amount of $10, I know it's Bitcoin, but just bear with me, and I'm going to make 10%. So I'm making $1 every single time. So my $10 becomes 11. And now I'm going to put that $11 in and make 10% over and over and over. And by doing so, I'm going to eventually plateau. You're thinking I was going to say snowball my account and blow it up. No. If I reinvest the same percentage every single time, then my account will start to blow up because I'm reinvesting the profits. And even if you're only using a small amount of your account, but over and over and over for repeated trades, this can have incredible side effects that include bloating, discomfort because of all the profits in your pocket, uneven discs in your back and in your hips because you're sitting on a big fat wallet of profit. You get the idea, okay? You're going to make a lot more money when you compound and reinvest your profits into every single trade. Whereas if you use the same static amount, you're going to plateau. Some of you have built your accounts to such a degree that now you're a little bit more scared about losing money and you're not sure how to put that much money into a trade that you're not sure if it's going to work out as well. Now, first thing, trend trading. If you know the trend is up, then you can get into a trade. Even if there's a pullback, you know at least the general trend is up. This is why I'm talking about this with you. But when you're using more size, use the same percentages across the board. If you have an account that's $500,000, don't put $100 into a trade expecting you're going to blow up your account with $100. No, you're not going to do anything. That's going to be a waste of your time. You're going to be slapping me in the face out of disrespect. Put in 5%, put in 10%, put in whatever percent you want. Although I have my own suggested percentages that I teach in courses at thebettertraders.com, but you can do whatever you want. The main point I'm trying to get across, you should reinvest profits because when you can compound on a chart that is trending up, and this one has been trending up for a year, you can do really well by compounding every single profit back into the chart over and over and over again. The other indicator that I want to share with you is what I mentioned before, and that is the Ichimoku cloud. The Ichimoku cloud is great because it does a couple of things. It focuses on the present, the past, and the future. So we have these two spans below the price that are basically projecting the strength of the trend. Think of them as like moving averages. Then we have the lagging span. The lagging span is very interesting. It is the actual closing price of our current candle or current period that's set back 25 bars or 25 periods. So this is 25 days ago. Now, if I change it to the hourly time frame, it's 25 hours ago. You get the idea. It's all dependent on the time frame. So the reason why this is so interesting is that when we have this lagging span back here and it moves above the price right here and above this cloud, these two lines right here, and we see it go way up like that, we know that the trend is strong. Even if we have these momentary pullbacks, as long as the lagging span, or I believe it's called the Chikou, is above the price, we're golden, we're good. Now let's verify that by looking at the history of this chart on the daily time frame. So when we have an incredibly strong breakout, like we saw back here for Ohm, back here on late December, we saw the Chikou, the lagging span, shoot way above and stay above for a long time. Note that the trajectory of this lagging span is up for the most part. Things are looking really bullish and strong for this chart. Now, these two indicators right here, these two lines are more closely tied to the price performance of what's happening in the current day. But then we have this mass below the price right here. This is actually called the Ichimoku cloud, and this is a forward pushed price reaction. So when we see the price move up, we're seeing the moving averages moved forward as well. Now, there are different levels for this. There are also different settings that you can use for the Ichimoku cloud, but here's the basic thing that you need to know about using this indicator. If the price is in the sweet spot right here, we have the lagging span to the left, clearly above price action. We have the cloud over here, and the price is well above the cloud. Guess what? You're in the golden zone. This is an extremely bullish chart that should continue to push up higher and higher and higher, which it clearly does. Now, here's another tip with the Ichimoku cloud. When the lagging span, the Chikou, right there, touches the price, this is a warning signal that there will be consolidation to come, especially when it does something like this. Now, the TBO, to be honest, does something very similar to that. When the price goes inside of the cloud, this is an indication that the trend is slowed down and that we're going to be consolidating. When the lagging span hits the price, then we have a little bit of a problem as far as the strength of the trend being strong. And when we see the price run into the cloud, again, that's another sign that things aren't so great. But when we look at the price back here, I'm going to go ahead and actually use the bar replay mode. So the lagging span is actually inside of the price at this point. But as we play this and we watch the bars, see that? When the price moves up like that, so does the lagging span. And once it's above the cloud and the lagging span is above the previous price action, we're golden. The trend can continue and most likely will continue pumping for a long time until we run into the price just like that. We run to the cloud and then we push above. See this? Oh, so painful, so painful. And then finally, boom. So here's the fun part about this indicator. As much as I love this indicator, the Ichimoku cloud is great. It's free. It's nice. But to be honest, you're missing out. If you're looking at this and waiting for those breakouts, they don't happen that often on the daily daily time frame. However, with the TBO, the beautiful part of this indicator is that the slow line is already telling us that there is a strong trend in play. And I haven't even talked about these white dots, the TBO breakout signals that let us know that we should expect some explosive price action to follow. But here's what I'm saying. Even when the price is consolidating like this, and it's in a really disgusting range like this, just embarrassing. And we know that the long macro trend right here, that the TBO slow line is pointing up, we can expect a breakout. Can the breakout happen in 21 days? Sure. 28 days, 32 days? Sure. It can happen as long as it takes. But the main thing to understand is that the slow line is pointing up. Even if we're consolidating, even if things look bearish, if the slow line is moving up, we're golden. Whereas the Ichimoku cloud doesn't give us that same confidence in the trend. Now, let's talk about the other part of what this indicator is called, the trending breakout indicator. So that means that this indicator also identifies breakouts. A breakout is identified by these white dots right here. When we get 3 in a row of these white dots, this is letting us know that we should expect explosive price action to come. Where these breakout symbols happen really matters. When they happen at the beginning of a trend, especially after we've seen a whole lot of these orange dots, which are TBO close shorts, these are early warning alerts letting us know that the short trend, see how the red cloud right there, we were in a short position for a long time on this chart, and all of a sudden, boom, and then we get our TBO breakouts right there. This is letting us know that the first one right here was not only accurate and early, but man, oh man, was it right. That was one of the best possible entries for this chart. But as we've already talked about, you can trade it on faster timeframes. You can trade the bounces. You know, when we're in a period of consolidation, if the slow line is moving up, we're still golden. So this begs the question, wait, you just showed me the current time, and I just saw one of those as well. You're right. This is why I'm also showing you this chart right now. This is actually not a perfect TBO breakout because a perfect one is 3 in a row. And unfortunately, we do not have a tic-tac-toe. We're missing a toe. So we got a breakout right there and then 2 breakouts. So the price has not responded yet. However, when we see the price above the cloud, we are looking at an incredibly strong bullish chart. Therefore, this is a great candidate to trade against. Now, caution, this is a BTC pair. If you've been watching my videos and paying attention, I've been saying to proceed with extreme caution trading against Bitcoin. Why? Well, if you've watched my other videos where I talk about the importance of paying attention to Bitcoin, that the last 3 months of the year, typically October, November, December, are very, very heavy Bitcoin months, meaning that Bitcoin performs better than almost everything else. That means everything else against Bitcoin, like Ohm, BTC, typically won't do as well. So proceed with caution. However, we're seeing an amazing breakout opportunity here on the chart. The other thing that I want to also remind you is that there will be some charts that completely ignore whatever Bitcoin's doing. So don't be surprised if Ohm continues to power to higher highs, if it just shoots up like a rocket with Elon on the back and a monkey in front. Why? Because it's a rocket going to Mars and you're going to make a ton of money. Some charts just don't care whatever Bitcoin's doing because this is a much, much smaller market cap coin compared to BTC. Therefore, its moves can be way more volatile. It can pump even while Bitcoin is pumping. So we've talked about a trading strategy using a faster time frame to look for entries or on the daily, waiting for a bounce. Now, for the Ichimoku cloud, what we want to do is we want to wait for the lagging span back here to go above the cloud. So we have to go back many days to actually get that to happen. So I think we're looking at this. Yep. Right about here, perfect. So when we see the price right there break above the cloud, so does the lagging span. This is actually the breakout that we want. So how well does this breakout actually do for us? Let's go ahead and measure it from here. We'll turn this back on to see. Price falls down a little bit, falling down a little bit. It's taking some time, but check it out. And then it's up 18% is what that said. So after this, it shot up about 22 to 18%, which is great. That's a good breakout to catch. Now, we don't have to trade on the daily time frame. We can trade with the Ichimoku cloud on faster time frames like the 4-hour time frame. And we can use the same concepts when we see the price bullishly breaking out, especially the lagging span breaking out above the price is above the cloud, then we can trade this. We can do the same concept of using the Ichimoku cloud to make these bounces. But again, we want to be scientific about it. We want to be measuring and we want to see how well it's responding. Now, with that said, there's a lot of lines in here. It's kind of difficult to see the price. So feel free to go into the settings. You can turn off the conversion and baselines, which is It's not something we need for this specific strategy. We can make the lines a little bit less annoying looking. We can turn down the brightness for this, or rather we can make them more transparent instead of having them be super duper opaque. So this way it's a little bit easier for us to see. So that way the price is standing out more. Feel free to customize it as much as you want, but it's a great indicator to use. So how could we execute this with a platform like AllTrading? Now I have a trade here that I opened up yesterday with the same concept. Using the TBO, I took a trade, I entered, and I'm actually going to go to the hourly time frame instead. Now the TBO is not available here directly on AllTrading, so I have to use TradingView for this. But you can see I entered here at this bottom. I took a quick little profit at 3% because I'm on faster time frame. So I'm looking to take profits much quicker than I would if I was zooming out to the 4-hour or the daily time frame. The time frame determines your take profit target. When you're on faster time frames, you're going to want to take profit a lot quicker because you're looking to make these little quick nibbles, these scalps. So when the price goes up real fast and you have that set amount, just take profit quickly. If you're looking at the 5-minute time frame and you're looking to take profit at 50%, you're on the wrong time frame, friend. Zoom out to the daily, zoom out to the weekly, and understand that that trade could take an extremely long time to come to fruition. Whereas with faster time frames, you can take profit at 3% in and out, on with your life. This is the kind of setup that you can enter on a pullback. You can take profit. I have another split target right up there waiting. Unfortunately, I got teased. I didn't get my other take profit target hit. The prices come down, but you know what? This is actually okay, because one thing that we can do back over here on TradingView is that we can use the TBO cloud to help us identify good levels of support and resistance. Right here is a strong level of resistance, which flipped green. That means it's now support. So I can look at this and I can say, okay, well, this level right here could make for a good dollar cost averaging order, or a DCA order, or a safety trade, or I can add funds here, however you want to say it. I could also go to the daily time frame as well. And if I want to be extremely conservative, I can again do the same thing. I can look at the daily resistance line, which has now been flipped. Or if I want to be extremely cautious, I can aim for the bottom, the TBO slow line. Now this will most likely not happen because we have not seen Ohm touch that line since December 2023. So we might be living on a prayer with Bon Jovi forever until that happens. But you can see there's a couple of crossovers that do happen. So we can see the price coming here onto this line, the medium slow line. We could use that. Honestly, using support and resistance lines works the best in my opinion. Look at this, the long line right there at 1400 sats. It's basically just 1% above. And that's exactly the strategy that we teach with the TBO. I never, ever, ever place orders right at this level. I'm going to go here. I'm going to go just above because it's a support level on a super bullish chart. I don't want to go below support. I want to go just above. Perfect example of why I would do this, because the chart's already screaming bullish. Okay. So on AllTrading, the main things I need to keep in mind, I need to pay attention to my time frame, and I can change my time frame as much as I want, but I need to adjust my take profit strategy to the time frame. The second thing I can do is that if I know that the chart is extremely bullish and I want to take advantage of that bull run that's happening right now on the chart of Ohm, I can also split my order up into multiple take profit targets. I'm going to click my order right here to edit everything. I've sold half, the remaining 50% here, but let's say that when I'm looking at the chart, I actually think that Ohm could actually go up a lot higher. So I want to put my take profit target a lot higher. So right here, I have it set to 11%, or I can choose to enter in a number like, well, I just want a random number 15, or I want to drag it over here in the chart and I can set it, which is great. So instead of me closing out with just a little bit of profit, this way I can adjust the take profit target and I can aim for a much higher target to earn a higher reward. Another nice thing about this too is that you'll notice I have this green order that says buy. Scrolling down here, you can see my current order where I've invested about 0.008 Bitcoin, and I have already realized or recovered half of my investment. So I sold half. So I am net positive right now. If the price were to fall down here, I have an order waiting for 0.00877. So basically the same amount that has been invested. So I'm actually reinvesting my profits and doing a little bit more. Now, if you don't want to, of course, we can come down here, we can copy our recovered amount, and I can come all the way back up here to my orders, and I'm going to add that value here into my position size. So I need to come and look at my amount invested, 0.0087, and add in the 0.0045. So that's going to give me something along the lines of 0.013 or so. We can come up here, we're looking at 0.0175. So if I do this, we should be looking at that right number. Yeah, about half. So I actually want to do a little bit more, but we can adjust this new position size. And I could also say, you know what? On second thought, I want to keep this pretty high. I want to keep it up a lot higher. And I want to split this up into another target just in case things fall again, because you never can be too safe in crypto. So I want to move my order way down here just in case of a flash crash. So that way I'm going to dollar cost average my position down and down and down. I can rinse, repeat the same strategy over and over and over. And I can make things even easier with AllTrading by saving this as a preset so that every single new order I open, all I have to do is press a hotkey. It's automatically going to place my take profit target, my dollar cost averaging orders, or it's basically a ladder order to buy more and scale in and scale out on both directions. It's incredible, especially for trend trading. The main things they need you to understand is that time frame dictates the power of this strategy. When we're on longer time frames, it's going to take longer for us to take profit, but we're going to be earning a lot more. If we're on faster time frames, we can close more trades, but for smaller percentages. But with that said, if we're applying the concept of compounding or reinvesting our profits over and over and over again, that means that we are able to make a lot more in a shorter amount of time. So it is a real toss-up. If you have more time to trade, I would favor faster time frames like 30 minutes, an hour, 4 hour. But if you don't have a lot of time, zoom out to the daily time frame. That's always a safe time frame to use. I'd love to hear what other indicators you all like to use, especially in terms of trend trading. Leave a comment down below and let me know what you think of OMBTC, or if you know of any other charts that are similar to OMBTC. And speaking of Bitcoin, if you're looking for a strategy to earn way more Bitcoin, to go from 0 to 1 Bitcoin, to be a whole coiner, you have to watch this video on YouTube. And until the next time, you know what to do. Stay awesome and stay in the green. Peace.